let me call on stage Bangko Sentral Deputy Governor Diwa Guinigundo to give the opening remarks to kick off this briefing. Governor?
Thank you very much, Claro. Honorable members of the economic team, other cabinet members, excellencies of the diplomatic corps, our partners from the private sector and multilateral institutions, colleagues from government, friends from the media and civil society, ladies and gentlemen, good morning. Sustained transformation. This is the story of the Philippines in the last few years. And we are confident this is going to be the same story in 2013. What are the components of this great positive expectation of sustained transformation? First, a sustained, strong, and inclusive economic growth in an environment of low and stable inflation. Second, a stronger public finance. Third, a more robust external payments position. Fourth, a healthier and more inclusive financial system. And fifth, stronger, more transparent, efficient, and effective institutions, serving a people more aware of the link between good governance and good economics. Beyond the macroeconomic picture, we see continued transformation in several sectors of the economy, all of which are expected to result in the eventual credit upgrade of the Philippines to investment status. Indeed, we are confident that the Philippines can achieve investment grade rating this year. We believe this is the tipping point for the Philippines. It is our solid economic performance in the last few years that has brought us to this position of strength to aspire and work for an even more sustained and widespread transformation. We take pride in our GDP growth of 6.6%, surpassing all projections, including the government's owned, and place the Philippines' output record second only to that of China. This strong growth was achieved in an environment of low and stable inflation. In 2013, inflation averaged at 3.2%, almost at the lower bound of our target range. While the global economic slowdown is compelling analysts and institutions to downgrade their medium-term GDP forecasts, growth projections for the Philippines continue to be revised upward. What is that to a man in the street? It simply means that on average, his absolute share has improved because the economic pie has increased. Government has more resources to use for providing public goods. The policymakers will be challenged even more to tackle the fundamental issue of social equity and development. At the same time, our external liquidity position remained robust, with a balance of payment surplus of 9.2 billion for 2012 and gross international reserves at $83.8 billion. Indeed, we are in a good position to face the headwinds of continued external shocks. In fact, the Philippines is one of the few sovereigns among its rating peers to be a net external creditor, with official FX reserves exceeding the country's gross external debt. What is that to every Juan or Maria? With strong external payments position, they can hope for relative stability in our exchange rate and relative stability in imported prices, especially those for oil products, raw materials, and machineries. Our banking system remained sound and stable, with capital adequacy ratio at over 17%, more than double the international requirement of 8% and well above the national regulatory standard of 10%. This means to all of us better intermediation of savings into investments, investments into job opportunities into higher income for our people. Our ranking in many competitiveness and governance indices also increased dramatically last year. In December, our ranking in the Corruption Perception Index improved by 24 points, from 129th place in 2011 to 105th. More recently, our global ranking in terms of economic freedom leaped by 10 notches to 97 among 177 countries and territories, the highest improvement among Southeast Asian countries. We need those numbers to convince us that change has come and there is a higher stake for multiplying our efforts in working for a better life for all of us. Ladies and gentlemen, in the Philippines, good governance has just begun to translate to good economics. Therefore, it is too early to be complacent about our good performance. The IMF notes that global growth will continue to be weak. Downside risks remain in the Eurozone and in the United States. And with the expected extended easy monetary conditions in advanced economies, emerging economies, including the Philippines, face the challenge of continued surges in capital inflows and the attendant consequences of these flows on the local currency, the prices of financial and real assets, as well as the overall domestic financial stability. These are the real thorns in the beautiful financial economic growth story. For us at the Bangko Sentral ng Pilipinas, we would like to assure our people that we're always ready to do our part to help build on the gains of the past years and, in fact, better those gains. We will continue to ensure that our monetary policy settings support non-inflationary economic growth. We will continue to adopt supportive macroprudential measures to respond to the challenges of a weak global economic environment. We will continue to implement policies that engender the delicate balance between the competition and growth on the one hand and financial and macroeconomic stability on the other. We will remain vigilant against any disruptive behavior in the market while encouraging investments. We will continue to adopt banking regulations to help ensure that our banking system remains able and strong to handle turbulence of external origin, but with significant domestic impact. Ladies and gentlemen, we are at the cusp of investment grade rating. But while we aspire for it, our priority is to build institutions that will allow growth to be more inclusive and more sustainable through more investments in real economic assets that will improve the productive capacity of the entire economy. Investment grade rating is not an end in itself. In fact, the market has already spoken that the Philippines may now be considered an investment grade country given the willingness of investors to buy Philippines at lower spreads. Investment grade rating is desirable because it will formalize the confidence and the trust of the market in the viability of doing business in the Philippines and offering more job opportunities for our people. There will be more and higher stakes. There will be more drivers for more excellent synergy between government and the private sector. We are all in this together. Ladies and gentlemen, an economic journey is always defined by those who traverse it. As John Stuart Mill said, the worth of the state in the long run is the worth of the individuals composing it. Looking across the room, we all see individuals with the best interest for the country. We are confident that we will be like-minded in our desire for continued transformation of this great economy into a responsive, inclusive, and well-governed economy. Maraming salamat po.